Imagine a market without a standard, a financial world where every decision feels like a shot in the dark. Welcome to the pre-Black-Scholes-Merton era of option pricing. In this period, the landscape of finance was akin to a ship navigating stormy seas without a compass. The market for options, contracts that offered the right but not the obligation to buy or sell an asset at a specific price, was a whirlwind of inconsistency and unpredictability. Pricing these intricate financial instruments was often seen as more of an art than a science, and the canvas was filled with costly errors and financial misjudgments. Analysts and traders alike were grappling with the challenge of valuing options. Without a reliable method to lean on, they were left relying heavily on intuition and patchy solutions. Imagine having to cross a chasm with a rope that's frayed and worn. That's what it was like for these financial professionals, dealing with a lack of consistent framework in a high-stakes environment. The absence of a standard model for option pricing meant that every decision was a gamble. It was like trying to hit a bullseye in pitch darkness. The financial world was crying out for a solution, a beacon of light in the murky waters of option pricing. And then, like the dawn breaking after a long dark night, three figures emerged from the shadows. Three economists who were about to change the game forever: Fischer Black, Myron Scholes, and Robert Merton. They were about to embark on a quest that would lead to a groundbreaking discovery. Their names may not have been known widely at the time, but their collaboration would lead to a revolution in the way options were priced. They were about to bring order to the early chaos, to turn the art of option pricing into a science. So, brace yourselves as we delve into the story of these three remarkable individuals and their monumental contribution to the world of finance. Enter our three protagonists: Fischer Black, Myron Scholes, and Robert Merton. A mathematician, an economist, and a physicist walk into the financial world. The result? An equation that would change the market forever. This isn't the setup to a clever joke. It's the story of Fischer Black, Myron Scholes, and Robert Merton. These three intellectuals, each from different disciplines, brought their unique perspectives together to create a formula that would forever alter the landscape of financial markets. Their groundbreaking formula, now known as the Black-Scholes-Merton Model, tackled the challenge of option pricing head-on. It took into account 5 key variables: the stock's price, the strike price of the option, time until expiration, volatility of the stock, and the risk-free interest rate. By integrating these factors, they were able to derive a single, clear price for an option, transforming the once uncertain task into a precise calculation. From the lips of a leading financial expert. The real beauty of the Black-Scholes-Merton model lies in its fusion of simplicity and power. It repurposes well-known concepts from physics and economics to give a clear price for options. What was once guesswork became calculation. In essence, this formula bridged the gap between the abstract world of mathematical theory and the concrete reality of financial markets. Its elegance lies in its ability to distill complex market dynamics into a single equation, a tool that analysts could use to navigate the choppy seas of the options market. Another expert weighs in. The advent of this model marked a turning point in the history of finance. It brought maturity and sophistication to the options market and laid the foundation for the development of the derivatives market, a crucial pillar of the global financial system today. And thus, the Black-Scholes-Merton model was born, a product of intellectual curiosity and collaborative innovation. This equation has left an indelible mark on the world of finance. It stands as a testament to the power of interdisciplinary collaboration and the transformative potential of mathematical models in our increasingly complex world. A new dawn breaks over the financial world. The Black-Scholes-Merton model is here, and it's about to shake things up. With the advent of this model, the once turbulent waters of options trading started to calm. The guesswork and uncertainty that once defined this market were replaced with the precision of mathematical calculation. The model's influence was immediate and profound. It became a cornerstone of modern financial theory, making its way into the toolkits of traders, financial institutions, and even regulatory bodies, The ability to price options with a degree of certainty led to a surge in trading volume. The market for options, once a niche field, matured overnight into a significant player in the global financial system. But the Black-Scholes-Merton model didn't just affect the options market. Its impact rippled outwards, influencing a myriad of financial practices. Trading strategies evolved, as investors could now quantify risk and reward with newfound clarity. Financial regulations adapted to the new landscape, acknowledging the power and potential pitfalls of this mathematical marvel. Perhaps the most significant outcome was the birth of the derivatives market. Derivatives, complex financial instruments whose value is derived from underlying assets, owe much of their existence to the Black-Scholes-Merton model. By providing a framework for pricing options, the model opened the door to a whole new world of financial instruments. Despite its critics, the legacy of the Black-Scholes-Merton model is beyond dispute. It has shaped the financial world in ways that its creators could never have imagined, influencing everything from the way we trade to the regulations that govern our markets. A single equation had revolutionized an entire industry. The story of the Black-Scholes-Merton model serves as a powerful reminder of the impact that mathematics and innovation can have on the world of finance. This model didn't just change the game, it wrote an entirely new rulebook. And that, dear listeners, is the power of a great idea. No model is perfect, and the Black-Scholes-Merton model is no exception. Despite its transformative impact on the financial world, some critics argue that it oversimplifies market behavior. The model's assumptions like constant volatility and the ability to trade without transaction costs have been called into question. Indeed, some believe that these oversights contributed to the underestimation of risk leading up to the 2008 financial crisis. However, let's not overlook the model's enduring significance. Its simplicity and elegance have spurred countless new theories and models, each aiming to better capture the intricacies of market behavior. Even with its limitations, the Black-Scholes-Merton model continues to be a pivotal tool in the world of finance, a testament to the power of mathematical modeling. The power of a single equation to shape billion-dollar markets is truly a marvel worth reflecting upon. As we continue our journey through the fascinating world of financial modeling, it's essential to note that the Black-Scholes-Merton model's story doesn't end here. We are currently witnessing an era of rapid advancements in technology and artificial intelligence, which are poised to revolutionize financial modeling. Machine learning algorithms are already being used to predict market trends, and AI is being integrated to better manage risk. These developments open up the possibility for more nuanced and dynamic models that can adapt to changing market conditions in real time. However, it's also important to remember that these new technologies bring their own set of challenges. As we've seen with the Black-Scholes-Merton model, oversimplification can lead to catastrophic miscalculations. With AI and machine learning, there's a risk of black box decision-making, where the reasoning behind a prediction or decision is unclear. Therefore, the challenge for the future will be to develop models that not only improve accuracy, but also maintain transparency and accountability. Thank you for watching. Explore our services and expertise at tothemoonwithai.com. Don't forget to like, subscribe, and turn on notifications for more insightful content.